Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, July 10th, 2026. S&P 500 currently at 7541. I'm David Zarling. I'm here with Ian McMillan. How was the 250th anniversary of our independence for you?
It's great. It's beautiful.
Yeah? Do any parades?
And yours?
Parades or fireworks or sparklers for the kids?
Yeah, parades, sparklers, all the good stuff, all the Americana.
Great.
Just the way it should be, right?
Yeah, I got to give a shout out to Nebraska. We were in Nebraska for a wedding over the 4th. And wow, they know how to do fireworks there. Legit.
Now, do you guys have strict laws there?
Yeah, Wisconsin's one of those where a lot of times you have to go over the border to get the good stuff.
Into
Illinois, Minnesota.
You buy your fireworks from Fibs?
No, their laws are probably stricter. I'm guessing you have to go to like Michigan or Minnesota. I'm not exactly sure. I mean, I love fireworks as much as the next person. I just can't bring myself to spend $1,000, $2,000 on it myself.
Oh, yeah, for sure not.
But, you know, when you got kids in college and potential weddings coming up, kind of seems like a misallocation of capital, even though I, trust me, love America.
You could have fun for $100 bucks.
But I'm telling you, we were at this wedding, which was out in the country. You come over this country road hill, and you could see the whole skyline of Lincoln, Nebraska, and the whole skyline was lit up. It was insane. It was one of the most, I just giggled. It was like so shocking. And kudos, man, if you're celebrating. I mean, America is the greatest country in the world and arguably the history of the world. I mean, never has a society been so self-governed and so wealthy at the same time in the history of the world. I think we could be thankful for that. Did you see the fireworks from the DC? What they did there? That was insane. Absolutely insane. Anyway, it was nice to have the week off from the podcast, but we're back. Markets are a little higher from there, but right, still in range.
Still blah. Not blah, but
Well, if you like trends like we do.
Same spot we've been in for a couple months.
Yeah, since May.
Some things worse, some things better, I guess. Dow, I guess, has been in an uptrend. I mean, I wouldn't say it's like strongest uptrend, but structurally, I guess it looks
well, in
better.
technical analysis terms, Dow near new highs, Dow transports new highs. So Dow theory confirming.
It's true.
Not too bad. Financials participating, industrials participating. Like, I'm not saying that that's where we've got alpha, but anytime financials and industrials are doing fine, it's really hard to get bearish on the market.
Doing fine. We'll see. We'll see if they keep the old regional banks together. I'm a little sus about that one, but so far it seems to be holding. Bank of America, the banks need to hold it together.
Well, there's multiple ways.
And banks have been sideways since beginning of the year.
Well, globally,
February-ish.
systematically important banks, GSIB, ETF, making new weekly closing highs if we hold today.
Well, yeah, those banks.
European banks trying to close at new all-time highs, EUFN. But you're talking like regionals, like KRE.
Yeah, we don't care about European
banks. I only do.
This isn't a European podcast.
It could be. We have some listeners in Europe.
Yeah, but you don't want to buy these and stuff. Well, their relatives are.
Yeah,
better. They're not.
When you look at EUFN versus S&P, pretty nice consolidation on top of a base.
Yeah, I mean, I could see that. The others are.
GSIB continues to go out at new highs versus the S&P, but you're talking them like, suppose we could use Quaba or
Yeah, I mean, if you want to
KBWB.
I mean,
some banks. Now, on absolute, they're going out to new highs, but you're saying, like, is this where you're going to get alpha? Is this where you're going to outperform a little harder? But it's good. It's good that they're participating. They're not rolling over. At least not yet. They always can.
Yeah.
Same with industrials. Industrials, big enough area that there's always something that seems to be working there. But as far as a group, what else? What else are you seeing out there?
Good move. Yeah, I guess, sir. Banco Santander. Sorry, I don't need to get stuck on
No,
banks.
we can. Well, even Canadian
Royal,
bank.
Yeah, I was gonna say
Canadian
banks.
banks. Shout out to our Canadian brothers. Not bad. Bullish behavior.
Canadian banks. Good for them. Guess we'll just take the Stanley Cup. You guys can have the better bank stocks.
That probably stung for some. That was a dagger out of the microphone of Ian McMillan.
I'm feisty.
You are feisty today.
I that's why I got a woo-saw before our call here in a little bit. Just gonna go outside. Maybe I gotta sit by the water for a little bit.
Sit by the water. In the water.
In the water, maybe.
Maybe some box breathing.
This is what happens. See, the tangents pick up on the podcast when stocks go sideways.
There is an uptrend in tangents when there's no trend in the market. I mean, we're still technically an uptrend, but what I guess we're trying to communicate is there is consolidation.
Yeah, we're in an uptrend.
But there's a consolidation since May. You know, you look at the S&P, and honestly, it's a really good consolidation considering we moved 20% in the S&P, 33% in the Qs.
I mean, I'd rather do this than go back down to like 7,000.
Yeah, we need to be thankful for the type of consolidation we appear to be getting, which is about 4% on the S&P, and what do we want to call this? About 5% on the Qs. I mean, I don't. Yes, would we love markets that go in a straight line? And there was a lot of money we made for our clients in that prior leg. So now we wait. Now we wait for this consolidation to resolve, and could honestly go into August. So maybe you'll be sitting in that pool even longer. Maybe the tangents will increase.
And hate us. The listeners would not be happy.
They wouldn't be happy with the tangent.
But yeah, even under the growth and value has been back and forth. I mean, there's not a lot of massive swings between growth and value over the last couple months. I mean, the sectors that you would want to see are underperforming. I'm not saying we're getting a lot of outperformance from a wide variety, but at least like staples, utilities.
Well, even high beta versus low vol
real
is
estate.
Consolidating.
High beta, low vol is good. Dollar stays above 100.
Yeah, isn't that interesting?
Which we're not.
We haven't seen the market.
Yeah, I'm shocked that we're not falling. I don't know.
Dollar's holding. I
mean, we're definitely.
Well, I was saying dollar's holding 100, but the weakness that we've seen the last few weeks in the dollar, I don't know. I guess I would have expected stocks to be weaker than they are with the dollar over 100.
Yeah, and I mean, it's like you said, it's holding nicely. I mean, there does seem to be a shift. Right? If you just look at like Russell 2000 versus the various things, maybe continue, but biotech's been on a good run. They kind of got to it today. That's going to have to hold it together.
Biotech has had a good run. And meanwhile, semiconductors continue to consolidate too. The leaders, it's not like we've had a massive breakdown. I mean, semiconductors since March rallied 88%. And I suppose you could say, oh, it's a little bit uncomfortable to have a 12% range. Well, you did rally 88% in semiconductors from March through June.
Wow.
Kind of normal.
Pretty normal. Pretty solid additional context.
Always got to keep that perspective. It's kind of like U.S. getting bounced from the World Cup. Like if you told me they'd play like they did in the group stage and then win their round of 32, I'd have been happy. But then when they lose round of 16, I'm unhappy. It's just context. You got to remember, oh yeah, if they had gotten this far at the start, I'd have been happy. But now we all got to cheer for Norway. Are you?
Yeah. I mean, that's what I'm cheering for.
Are you?
I guess
like
so.
You should. You know, always cheer for the favorites like France or Argentina.
No,
See, another
you don't want the
another
French to win.
tangent.
What are we going to do, Dave? We got to get this market to move. It's got to go for the sake of this podcast.
Got to poke a stick at it.
And it's kind of like watching paint dry. As an intermediate to longer term trend follower, these are the doldrums.
Yeah. Well, I just think a 4% range after a 20% move is pretty awesome. If that's what we're going to do. And if that's ABC, like using technical terms, if this is A is the first leg, B is the corrective move. If we get C,
Okay,
that
Elliot.
would be 9,100 on the S&P.
Yeah.
But we have a midterm year, Ian. I feel like the politic thing there's just not been a lot of narrative around that.
Now, people that, I think we're at the stage of, how to even trade off that stuff. No one cares about this stuff anymore. Trump's still tweeting about the Iran war. Ceasefire, no ceasefire. Talks, no talks. People are just numb to it. People are numb to the political buffoonery. And it was going on before Trump. It's not like this is new. What if you're making portfolio decisions based on what was that strait they blocked over there? Hormuz? Strait of Hormuz.
Which is actually a curve. It's not straight. Although straight's a geological term. Not spelled.
Dave, what are we doing?
What do you mean?
I don't know. What are we doing?
Not geological, geographic. That's the term. Geographic. Strait of Hormuz, not straight.
Geological. What's the difference between geological and
I
geographical?
feel like geological is more like, would that be like actual like physical elements? Like,
oh my God, we need this market to move.
yeah. It has to do with the study of Earth's physical structure, the solid materials such as rocks and minerals. Geological.
If this market doesn't move, we're gonna have to segue into like an archeologist.
Yeah, geographical would be more like
okay.
Mountains, plains, straits of Hormuz. I learned one I haven't heard since grade school. My brother that I saw in Nebraska was talking about wadis. I was like, dang, bro, bringing back some old. You're right. Let me pause. We need this market to trend.
I apologize that this podcast is not informational.
It is. We've talked 4th of July, fireworks rules, World Cup, geological versus geographical. Cover anything else? I mean, we haven't talked about block cameras or where do you
Messi's wedding.
Who? Oh,
Messi's
Messi?
wedding.
He's getting married? I thought he was already married.
Yeah.
Oh. Maybe that's the point. Interesting.
Yeah.
What I think I'd like to see if we're gonna move higher is junk bonds do a little bit better on an absolute basis. They look fine versus something like intermediate term bonds like IEF, 7 to 10-year bonds.
Yeah.
Triple C credit spreads are still
Fine.
elevated. We're still
Really?
above 250 day moving averages. So we'll see. What we haven't talked much about is like software or some of these. Yeah, even BizD. BizD looks bad. BizSystem, yeah.
I think a lot of the mega caps are Netflix, Meta, Microsoft, Amazon.
Apple's about to go to a new high.
Yeah, Apple looks fine. Amazon's back below its 200 day, is it?
Amazon. Nope.
No.
Bounced. Meta, strong day today. Back above a 200 day.
All right. Well, there you go.
What about breath?
It's fine. It's fine. I mean, overall, the Dow is probably the weakest, but
Well, the best performing index through the first 6 months of the year is small caps, Russell 2000, and then NASDAQ 100. So that's kind of healthy market behavior. Makes you wonder where we'll end up on the year. We've had.
I mean, right now we're.
Go ahead. No,
Go ahead.
No, you go.
I say we're the highest on the S&P since June 15th. I don't know if we'll close here, but
June 15th feels so long ago.
a long time.
Feels so long ago. So breadth is good. Financials, industrials participating. Other things overseas participating. Some elevated triple C credit spreads. Dollar above 100. If we're being picky, likes better things out of junk bonds. Russell 2000 and NASDAQ leading halfway through the year. Ryan Dietrich put out that there's been 11 Julys, the month of Julys, in a row positive. Do you think we get that for the S&P?
It's crazy. We were off to a good start.
We are. And then when we go back to the midterm year thing, I mean, typically we get a correction somewhere in these next 3 months, and then that's the bottom for the year, and we rally into year end. It'll be interesting to see if that happens again, if we get corrective behavior somewhere in the next 3 months and then higher, or if that was just it. The low was this early July, and we're back to talking strength next week, and our listeners are happy. They're not turning it off early because we're talking about random things. What's the VIX doing? Ooh, volatility lowest
Probably
since May.
18?
Yeah, 15.
Wow, 15. So, yeah, I mean, you could get another flush down here to the 13s.
Take it.
I wouldn't
Take
hate it.
Let's do it.
But until then, we wait.
And that's okay. But I do want to highlight before we
Yes.
wrap this up, the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. Anything else you want to highlight, Ian, before we release our listeners into the second half of the year?
Second half of the year. Man, when you put it like that, Dave.
Well, doesn't it always feel like 4th of July happens, then it's Christmas? Maybe that makes me sound old. Maybe that's really what is. Wow, Dave.
Things get busy.
They do. It'll be interesting. I think we just have to appreciate when uptrends happen and also be grateful for sideways consolidations that are only 4% depth. I mean, that's pretty minuscule. Don't really want it to devolve into like a 10 to 15. That's not as fun. And really during these periods of consolidation,
Agreed.
you kind of have to look at what are the strong things. And so it does make you wonder, value is going to hold up better than growth. It's not. That's not really happening. It's more growth. So it makes you wonder.
I know. It's so hard to, I wouldn't say hard. It's not the right word. Just, it's a period of the markets in the tumbler, and when we resume higher, we'll see.
Like we're riders on the storm.
Ooh, I like that. It's probably going to be the podcast title.
I like it. Because, it's just a little bit of volatility here. And again, I guess I shouldn't paint it as, oh, yeah, we're going higher. But I don't think we get to complain about a 20% advancement, 4% consolidation. And then if we do move higher, I don't think we can complain about that.
Agree.
We just like straight trends. We like making money for our clients.
Yeah,
We like making money for our clients, and it's better when it's in a straight line. Everybody likes that. Who doesn't like that? You're probably a communist if you do like that.
Commies love trendless
Yes.
markets.
Communist.
It's how they take advantage
Mm-hmm.
of society.
That's right. Got to keep the uptrends uptrending. Anything else you want to highlight? You could even do another tangent, Ian. I don't care. It's our podcast.
Good.
You good? You're good?
I'm good. I am.
Alrighty. Well, it was good to get back on here with you. Maybe we get a resumption of the uptrend. Maybe we continue to consolidate. Either which way, we will try to continue to provide some episodes for you all. They will be more probably engaging when the uptrend continues, unless you guys really like our tangents, which that's fine too. Otherwise, we appreciate everybody listening. We'd love it if you gave us a high ranking on your platform of choice and shared it with your friends. That would mean a lot to us.
I would. Have a great weekend, everyone.